Hello everybody, this is Julio speaking. I'm recording today's presentation. Today is the Wednesday, the 11th of March 2015, and I got a few things that I'd like to share with you. This presentation is about Learn Forex. So we have the euro, so it's Euro USD, known as the euro, continues its way down to the parity level. Parity level means 1 equals 1, so 1.0000 when you're looking at the euro versus dollar chart. Okay, I'll show you now in a minute. Now, all the euro crosses been providing amazing selling opportunities recently. So anything to do with the euro is all short. So euro pound short, obviously euro dollar short, and pretty much most of the other crosses, if not all, they've been providing amazing selling opportunities. Now, therefore, what you have to remember is that the trend is your friend until it bends in the end. So basically, what you have to do is to follow the trend. Don't sell onto the phase one. So don't sell when it's just, for example, crashing down. You have to wait for a pullback and then look to sell at the beginning of the phase one. Now, I'm gonna go through a trade that I've placed. This is the USD Japanese yen. It's clearly in an uptrend. The market is giving higher highs and higher lows. Okay, now if you want to make it a bit more clear, what you can do is to do your homework and put your lines up. I'm gonna put the buying zone, which I covered it on some previous videos that I've done. So this section down here, this is the buying zone, which is 20% of the whole section. Now the market is giving high highs and high lows. You are looking to buy at the beginning of the phase one. Okay, so puts a new high. So this high is higher than that high. This low is also higher than the previous lows. So it's giving high highs and high lows. When it pulls back, that's when you're looking for buying opportunities. And then off it goes again. Pulls back, even like here. Pulls back, look for buying opportunities. That's a pretty tiny high. I'll be looking for strong highs, high highs and high lows. So that's a nice high. Pulls back, low test, off it goes, and it's done it again. So here in this point, it was providing nice buying opportunities. Stop loss below the previous swing low, and a target is just above a 1 to 1 reward to risk ratio. It's actually a 1.5 to 1 reward to risk. And what I've done, I apply a bit of discretion here. So based on my analysis, I decided to put a 1.5 to 1. Okay. What else? Now the spread on this particular one is 1.6, which is pretty cheap. This is done on the 4-hourly chart. Also, this indicator called the stochastics indicator, which is a pretty good indicator when you're looking for potential turning points in the market. So now up here market tends, down here market tends. Let me just get the crosshair so you can see it clearly. So up here tends, goes down. Up here tends, comes down. So here became oversold. There were far too many sellers in the market expecting some buyers, and these are the buyers coming in the market. So ignore it in the middle. This signal here is not telling you anything. You have to look for the extremes. So it is 80 and above 80, or 20 and below 20. So there is regarding the stochastics indicator. Right. So nothing I can do in here. I just need to let it run. Okay. Just gonna let it run, and that's it really. You got a stop loss there at a 1% risk, and off it goes. Okay. I'm also buying the Italy 40, and I bought it after a beautiful pullback here. So this is kind of like an income wave as well. So the market is giving high highs and high lows above the MA's pulls back. That is giving a beautiful lotus spot, and then I'm just holding it. I'm still in. Okay. So I haven't got any target. I've did it as a manual trade, and don't have any target at all. And I can show you. I can show you. So this is the trade running down here. So far it's made 741 pips. It's over £1,000 profit. So it's just over. Well, this like well on a 50k account. You're risking 1% is £500. Okay, so this is just over 2 to 1 so far. So far I'm up 2% on this particular trade. Now I've got the USD Japanese yen down here, which is pretty much break even. It's 3 pips down, which is pretty much the spread. Okay, so you just need to let that one run. So this is the account balance. Now if you go to, for example, to the SC Connect, this has been the performance on the on this account here. I started down negative, went down slightly, 0.4. It was just testing it, getting to know the system, how it works, the whole thing. Then I took it up to 2% and gave 1% back. But now if I close this one here, or I locked in the profit from beneath, that 2% is going to be added onto my account, so it's going to shoot up from 1 to like 3. Okay, and that's the equity curve. So not a bad equity curve. I mean, at the beginning you might be going up and down, potentially even down, testing it, practicing, getting to know the system, getting to know the markets, how it moves. You might make a few mistakes here and there, but it's all for a good reason. It's all for a good cause. You're learning, you're practicing, you're testing it. Once you build it up nicely, then obviously you're going to identify particular patterns and particular way of trading. You're gonna find a strategy that works much better for you and suits you more. Also, in terms of the currencies or the stock indices that you're picking, you might have kind of a preference from one to another. Right, so let's just get into business. So, for example, all the euro crosses, they've been pushing down quite a lot. So these are all selling opportunities, pushing down. I'd rather have kind of lower highs and lower lows. Okay, these are all the euro crosses. They've been all pushing down. Okay, so this is the euro Aussie. This is the euro pound, giving a beautiful. This on the forward chart, by the way. Euro pound has given a high test bar in the direction of the trend. This on the forward chart, and it's also ring high as well. So this most likely will be flashing here. There it is. There is also an opportunity here on the income wave because it's done on the forward chart as well, and it's a high test bar, which is also bouncing off the slow moving average, which is the 8 moving average. Tells you here, so, and there's a bit of a pullback there. So that's potentially giving you an opportunity to sell in the direction of the trend. And okay, let's go to the daily. Let's see what's happening here. Not much. Fine. Let's move on. Go back to the profit booster. Just keeps on flashing. See what else the Canadian is telling us. Bring this down a little bit. This up. plus. Right, so this is pushing down. It is lows are getting lower. I got a slightly messy here in this section, but the lows are still pushing down. Highs are pushing down too. This is forming a ring high. Let's see what parameters we get given. Click on sell. Okay, fine, 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 fine. Click OK. Boom. These are the parameters given. There's entry down here, stop loss there, and a target down here is based on a 2.5 to 1 reward to risk. Now this is a bit much. I'm gonna cancel that. I'm gonna bring this down to 1.5 to 1. That's fine. Sell. Okay. And now it's a 1.5 to 1. So if you lose 1%. If you win at least 1.5%. All right. Now it's not a bad trend pushing down like that. And there we go. So if you remember about the selling zone and buying zone, this is within the selling zone, and that's the area you're looking to sell. The spread is 3.2. Okay, it's 3.2 pips commission on this one here. A bit of a pullback there. There is not much momentum behind it. It's been going flat for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, which are 2 weeks. So it hasn't done much for 2 weeks. The problem here is that it might just carry on following the same momentum, which is pretty much ranging. But overall, the whole picture is bearish, and hence the EMAs pushing down. And yeah, that's pretty much it. Let's see what else we have. So this is done on the 4-hourly chart. I always like to and look, the target is within the previous lows here, so that's good. I always like to have a look at the daily chart and see what the daily chart is telling me. Oh, this was a beautiful downtrend here, beautiful section, pushing down. Now, and that's a pretty nice little uptrend, although it's not giving cycles. I always like to see pretty clear cycles. Like here is giving some nice cycles there, giving high highs and high lows. So now, in this moment in time, we are down here. So this is the daily chart. So we're expecting the market to drop down to these lows here. Now, the daily chart is giving a low test bar, but it hasn't closed, so it is pretty much irrelevant. You'll have to look at 10 o'clock in the evening and see what the bar is telling you. Okay, well, that's fine. Now let's carry on having a look. Now on the USD Japanese yen daily chart, however, you can always see that there'll be markets telling you to buy, other markets telling you to sell, people buying, people selling it. That's what it creates the market. Now on the daily chart, this one here was a selling opportunity on the daily chart. It gave a high test bar that got triggered into the downside mainly because this is giving higher highs here. So I'm on the interbank radar. So this is giving higher highs by looking at the last 2 swing highs. Okay, here's the key. I mean, just telling you exactly. It's a very good example of interbank radar. So it is giving higher highs. The stochastics indicator is giving lower highs. So there is a divergence. There's a very clear divergence here. Okay. Hence the alert there. And um, basically when the stochastic is up here, it's telling you that it's overbought. So not only that, but it's also telling you that it's in divergence, so it's in disagreement. So it's telling you the market is going to reverse. Also, there is a high test bar which is bouncing off the top of the range as well. So that's the ceiling up here. So the high test bar is bouncing off the ceiling and it's giving divergence when the stochastic is also overbought. Okay, so that's a selling opportunity with an entry just below the lower bar. It's a bit late now because that was yesterday night after 10 in the evening, and a stop was above the higher bar, and that's a target. It was based on a 1-to-1 reward risk ratio. Now that got triggered, came back up on the 4-hourly chart. This was giving beautiful high highs and high lows, and that's the one I bought myself. Okay, I got a target there. So basically, the US strength it's continuing. That's why the euro is dropping. All the euro crosses are dropping. Cable is dropping too. Okay, and commodities are dropping as well. Gold, silver, crude oil, and European markets like the DAX is flying, and the US market is having a bit of a dip. It's having a bit of a correction, which is pretty expected. And that's basically what's happening in the market as we speak. So let's carry on. You see all the euro crosses all pushing down. Euro yen crashing down, euro crashing down. If you go into the euro pound, pushing down quite aggressively as well. Now, what I wanted to show you is the parity level. That was one of the bullet points that I had for today's presentation. So on the euro versus dollar daily chart, the parity level is not too far away. Parity level is just down here. So that means that 1 euro will equal 1 US dollar. So we'll have the same value, and that's called parity level. And that's when the price reaches 1.000000, okay, which is down here. So if you get a few more syllables, it'll be done at parity, right? It hasn't reached that level for years. Okay, you can go into the well, you cannot go into the monthly chart here because this is on the interbank radar. But if you go into the manual terminal, which you have access to everything, and go into the euro versus dollar, and then go to a much higher time frame, and then you crunch the chart a bit. So the last time was there was in 2004, 2005. Okay, so it's like 10 years ago. That was the last time it was down there. Yeah, actually, price is there. Wait, bear with me. Price is there. 2003. So it's over 10 years, like 11 years, something like that. So yeah, a long time. In other words. Okay, so that is the drop from 140 straight down to pretty much parity level, and it's been bouncing off this beautiful level here. So that's a big psychological figure, rounded number 160. That's 150 spot on. That's 150 spot on as well, and that's 140 spot on as well. Okay, and it has bounced off all those levels over and over and over again. Now, as it reached the 140, it just rejected and it crashed down all the way down to like pretty much parity level, which is just down here. So that's been a huge drop. Okay, so this is what you have to do. You have to go into higher time frames and look what's happening, and it will tell you a story. It's like reading a book. You just um, looking at a chart, and you just need to see basically what has been happening for the past 6 months, year, 10 years, and so on, and then analyze the market, put some levels up, trend line, support, resistance, and then obviously see how far can it go, and then you drill it back in onto the daily chart and 4-hourly chart, and that's when you look for opportunities which has to match with your overall understanding of the market. You just need to carry on in that particular momentum. Okay. Um, so basically, that's what you have to do. Um, Make sure you stick to the trend, which was one of the bullet points. So the trend is your friend until it bends in the end. So just follow the trend and trying to catch the phase ones in the direction of the trend. Okay, I'll leave it there for now, and I'll speak to you all very soon. Happy trading.